How to Invest. Episode 1. What is an asset? Hello, ladies and gentlemen. Welcome to the very first episode of How to Invest, the best investment series on YouTube. Whether you're just starting your financial journey or looking to sharpen your skills, you're in the right place. Today, we're laying the foundation by exploring what is an asset, the difference between appreciating and depreciating assets, the main categories of assets, and finally, the best types of assets to invest in. Let's dive in. What is an asset? An asset is any resource with economic value that an individual, company, or country owns or controls with the expectation that it will provide future benefits. In simpler terms, if it can help you make money or save money in the future, it's probably an asset. Assets come in three main types. Tangible assets. These are physical items you can touch or see. Examples include cash in your wallet, real estate like your home or rental property, jewelry, art, or collectibles. Intangible assets. These have value but no physical form. Think copyrights and trademarks, software licenses, brand reputation, or goodwill. Financial assets. These are instruments that represent ownership or a claim to future cash flows. Examples include stocks and bonds, mutual funds, bank deposits. Understanding these categories helps you recognize what you already own and what you might want to acquire. Appreciating versus depreciating assets. Let's talk about how assets behave over time. Appreciating assets go up in value. These are the MVPs of investing. Their value increases due to factors like rising demand, limited supply, or economic growth. Examples include real estate in a growing city, stocks of successful companies, precious metals like gold and silver. For instance, if you bought a house in a popular neighborhood 10 years ago, chances are it's worth a lot more today. Depreciating assets, on the other hand, lose value over time. This happens due to wear and tear, usage, or becoming outdated. Examples include cars, especially new ones, electronics like laptops and phones, office furniture and machinery. That shiny new phone, it's worth less the moment you take it out of the box. Categories of assets. Assets can also be classified in three major ways. By convertibility. These are financial instruments that can be converted into another type of asset. A common example is a convertible bond, which can be exchanged for shares of the issuing company. These hybrids offer the growth potential of stocks and the income stability of bonds. By physical existence. As we discussed earlier, assets are either tangible, physical, or intangible, non-physical. This classification helps businesses track and manage their resources. By usage, this refers to how efficiently assets are used to generate revenue or achieve goals. For example, a delivery company's fleet of trucks is a tangible asset used daily. A tech company's software patents are intangible assets that drive innovation and profit. Understanding these categories helps investors and businesses make smarter decisions about resource allocation. What assets should you invest in? Now that you understand what assets are and how they behave, let's talk strategy. The best investment portfolios include a mix of asset types. Here's a breakdown. Equities, stocks. These offer high growth potential, but come with higher risk. Great for long-term investors. Fixed income, bonds. These provide steady income and are generally less volatile than stocks. Cash equivalents. These include savings accounts and money market funds. Low risk, but also low return. Alternative investments. These include real estate, commodities like gold, and even collectibles. They can diversify your portfolio and hedge against market volatility. Your ideal mix depends on your financial goals, e.g., saving for retirement versus buying a home. Your time horizon, how long you plan to invest. Your risk tolerance, how comfortable you are with market ups and downs. Final thoughts. Assets are the building blocks of wealth. Understanding what they are, how they behave, and how to categorize them is the first step toward becoming a confident investor. Thanks for watching episode 1 of How to Invest. If you found this helpful, give it a thumbs up, subscribe, and hit the notification bell so you don't miss episode 2, where we'll explore how to build your first investment portfolio from scratch.